Hey, Jamie and Steve, what's going on?
What's up, Scott? Steve, ¿qué pasa? How's it going over there?
Hello, happy Monday.
Happy Monday to all. All right, and happy Monday to everybody that's in attendance. Today is September 23rd. Welcome to another Office Hours edition. Let's get on with the disclaimer here. So just want to make sure everybody in attendance is aware of the fact that everything we share with you guys is for educational purposes only. If you do need investment advice of any type, what to buy, when to sell it, all that good stuff, please seek out someone who is licensed that can legally dispense that type of information to you, either a registered investment advisor, Series 7 licensed stockbroker, the list goes on. So once again, just to clarify, all the info that we share with you guys is for educational purposes only. And we always like to take a little bit of time at the top of the hour here for the new people that might be in attendance to let everybody know, not only do we have the award-winning, one-of-a-kind technology known as Trade Ideas Pro, but we've also built quite the community around the technology. It all kind of starts off in the upper left-hand corner here with the Traders Room, which is hosted by Mr. Barry Anderson. The best thing, other than Barry, about the trading room is the price, which is free, and that's a rarity in today's trading world. If you've shopped around and did your research on trading rooms, what you've found out is they might be good, they might not be good, but one thing is for certain, most of the time they are not free. So here we have a high quality trading room hosted by Barry with 4, 5, sometimes even 600 people in there, depending on the day. And Barry does a fantastic job at showcasing his trading style, along with the way that he's using trade ideas to find his trades. So whether you're a seasoned veteran or a new trader, always a good place to be. And of course, with the 5 p.m. Eastern webinars, it's Monday, so you get myself and Steve. Tuesday, Steve's going to take the steering wheel. Andy Linloff's going to ride shotgun with him for the Trade of the Week webinar. Q&A demo comes around on Wednesday with our CEO and founder, Mr. Dan Merkin, and our Chief Technical Officer, Brad Williams. Always a good show. Most of the time, they're telling you what's coming down the pipeline, showing you new features that are going to hit the product, but always entertaining with those two. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I ride shotgun with him. And then the ever popular and ever growing Friday support session. I've had nice crowds in there. Only expect that to get bigger and bigger. But Friday support session is a little bit different because it's anything goes. Whether you have questions about basic things like simple configuration issues or back testing and auto trading with Holly and Brokerage Plus, anything is fair game. And the cool thing about it is you get myself, Steve, Andy, and Sean in there all at the same time, typically, all putting our heads together to answer your questions, solve your problems, all that good stuff. In addition to the 5 p.m. Eastern Monday through Thursday webinars, we've got TI University. These also run Monday through Thursday, Monday 101, all the way up to Thursday 401, Tuesday and Wednesday in between. These guys start at 12 p.m. Eastern, and the content remains static. So if you can't attend these live, we've got nice recorded versions of them on our YouTube channel. So you can watch those as many times as you would like. The benefit of attending the live versions is that you can get your questions answered in real time by the host of that specific webinar. So a good way to get over the learning curve quicker than later with TI University. Always like to give everybody a little peek about how our subscriber base has grown since we introduced our AI modules back in the very beginning of 2016 with the rollout of Holly 1.0. Since that point in time, we've added Holly 2.0 and Holly Neo, and we can see 17 and 18 rising user base. So it'll be interesting to see what that bar looks like come the end of 2019. Following in the same vein, this is a similar chart, but based on Brokerage Plus, our add-on module that allows you to trade through our interface if you have an account at Interactive Brokers. What we've done is we've just created a much more intuitive interface. Since we launched Brokerage Plus, you can see the blue bars are the live executions. Orange bars are demo orders filled, typically because before anybody jumps in there in a live environment, they like to kind of find their feet in demo mode. So as you can see, orange and red both increasing on a monthly basis, telling us one simple thing: people like it. People like trading through Brokerage Plus with interactive brokers because it's got a lot of cool functionality and it's easy to use. We love interactive brokers, everybody over there, but their interface a little convoluted. So Brokerage Plus is based on several traders: myself, Brad, Steve, Dan, Sean, Dave. The list goes on and on. Over, probably pushing 150 years of experience went into the design of Brokerage Plus. So we just think it's a superior way to execute. So if you haven't tried it out yet, go ahead and try out Brokerage Plus. All right, on to the agenda today. All right, Steve, not exactly the most exciting market today, but if you're ready, I'll kick it on over to you, and you can kick it on over to you, and you can talk about the ins and outs and look at a little bit longer time frame.
Sure, I'm ready. Okay. All right, welcome to my screen here. So really not too much to talk about, guys. We looked at the bigger picture last week, and that is, for the most part, is this going to be a mother of all double tops, or is this just yet another target for which the price action to get to? We've been, hang on a second, that's not what I wanted to do. Yeah, we've been building higher lows and whatnot, and so is this becoming, the textbook cup and handle type of situation? I think it very well could be. I mean, the odds favor that that's what we're looking at right here. And so when we look at that cup and handle, the handle part, we're noticing that we've got some key moving averages here, kind of still supporting the price. Yeah, we lost a little momentum here, but after a double tap on those highs there, it was kind of obvious. I think we had to pull back and try and gather some more strength. So I'll be watching this 20-period moving average and obviously this 52 to make sure these areas hold. And even if they do, it's still a higher low. But we need to consolidate so we can gather some steam to come back and push through those levels. And it's pretty simple as that. If we go over to the NASDAQ, it's kind of the same story over there in the NASDAQ and the Qs. Not quite the double top. This was the original top back here. But if we look at the current action, we're settling right back into kind of the pivot level where these high bands were of the volatility we had earlier, now settling right back in, perfectly touched it today, as a matter of fact. So we really don't want to see too much of more give back here in the Qs. They're a bit more closer to their 20-period and 10-period than the S&P. So I will be watching that for sure. And then lastly, or not lastly, but the Dow also pulling back. Everything kind of looks the same, it's the same question across the board. Is this going to be a cup and handle? And then lastly, the IWM, which really put in a stellar performance a couple weeks ago, is for the most part holding its own, but still, there's really nothing to get too excited about in the Russell 2000 until we get back above these levels for the most part, maybe even a bit more, something like that. That's probably a bit more realistic. So, using that as a respective upside point, that's what the IWM is trying to do. Pull back, get a little steam, gather in, dig in, and then push higher. I think that's really what we're looking at across the board. Now, we obviously can't factor in any black swan events or anything that can happen globally or geopolitically, but this is what the price action is showing. It's just knocking on the ceiling, and every time it comes back, it digs in and builds a higher base camp. And that's what I'm really seeing across the board. So, quiet as it is, as Jamie might said, we're still doing some churning and digestion work. Maybe the few days down the road, we might have another possible attempt at those levels. The interesting sector of most is really silver. Silver got back in the game hard, typical over the weekend. This is the kind of risk you can take if you're short or long. Big gaps over the weekend in the metals, gold and silver especially. Gold not as impressive on the actual move, but moving higher out of its little range there, building higher lows. Pretty good trend over there, but silver still might have some of that excitement that it had last month here. Might be showing up again. That's a pretty significant gap after a pullback like that. So keep an eye on some silver stocks. Pause, PAAS looking very similar. Big, nice reversal on the pro gap there as well after riding that 50-day moving average. That was kind of the interesting sector of the day, but The story is this going to be a giant cup and handle that we can look back and just see that this is how price action has to do it, has to pull back, gather the strength, and then have the inertia to push through. That's why they call it a cup and handle, because it looks like a little teacup. And that's really it, Jamie. Not much more to say than that. Kind of an abbreviated session today for a few reasons. And that's it.
Yeah, no worries. I'm a little teacup, short and stout. All right.
Right.
Let me grab it from you. Okay, back to my screen. Hopefully everybody can see. Real quick here, just get that out of the way here. Actually talk about the compare count just for a moment. There was, once again, there was nothing really to write home about from the market action today or the compare count readings that we can see right here. After the first 15 minutes of the open on my big cap compare count window, which is looking at stocks with a market cap of 4 billion or higher, hitting lows and highs in that first 15-minute period with accelerated volume, we just barely had a upward bias, one could say. 55%, 56%, somewhere right around there. You know, we did have a little bit of an updraft. I mean, pull the SPY back up here. You know, bottomed out down here and just crept up here, gave back a little close, but for the most part, the majority of the move was up, and then this little flat line action for the rest of the day. So barely an upside indicator here. Nothing to write home about. I really don't get excited until I see these things 57, 58, approaching 60 before we could theoretically be in a trend day. Needless to say, we were very far away from a trend day today. So moving right along here, let's talk about what the AI did today. And for a lackluster day, I will tell you this, Holly gave back a little bit towards the close here. If we look at the totals over here, at one point in the day, she was up right around 400 on the totals here. And looking now, 230, 330, 340, gave back about 60, we call it 60, 70 bucks in the last bit of the market there, but with that little downturn. Not surprising, but a pretty strong day considering, you know, the action that we had in the market. So what we're going to do real quick here, and by the way, ladies and gents, let's just take a look. We're going to talk about Holly. 26 trades, I believe, is what she finished with here. That's right. We're going to talk about how we could have extracted a little bit of the risk on, risk off spread. And then something completely different, at least for my webinar anyway. Swing trading. I took the time to do a little optimization on some of my favorite windows and developed some decent looking windows that might provide you guys with some decent swing candidates. So we'll get into that as well. And as always, even though they were few and far between today, we've got 3 stocks that exhibited some nice, clean textbook range breaks that we'll talk about, assuming we have time. All right, but first let's talk about Holly. 26 trades, long bias, of course. So let's talk about the risk on, risk off spread, as well as talking about, boy, this is, we're going to talk about this one first. I'm just going to go ahead and sort the blotter by in alphabetical order here, because we had several duplicates again today, and this is something that's been rearing its head quite frequently here lately. And when we do have duplicate signals, for example, A, G, and C, we can see different or the same strategy, but for different modules. Topping formation here and here on A, G, and C. One was from 2.0, one was from Holy Grail, but notice they fired at exactly the same times here. Now, that's completely different when we talk about MLNT, which just happened to be, and once again, this is showing its head more and more today as well, a huge percentage gainer in MLNT today of 14% going into the close. Was a little bit higher before the little topping wick got put in there. But you'll see this one is different because different strategies from different modules, okay? So the first one, MLNT, 9:15, 45 minutes in, we can see right here. Really like this entry, even though it's not the prettiest chart here. We got this wide range bar to start the party, put in its high, and then we just kind of snuggle up for the next 30 minutes. And then we have Holly issuing the buy at 338 here. Let's see here. And it was not the breakout. There was one on here today that's a pretty nice breakout from the breakout strategy. But these were strong stock pulling back in Mighty Mouse. Mighty Mouse got it first with his 338 price right here. Timed exit. Well, let's take a look at Mighty Mouse. Mighty Mouse today, as always, 60-minute hold time. Oops, I keep popping up that guy there. So we can see here, not including the entry bar, 1, 2, 3, 4. Holly does what she's programmed to do, bails on the position, and books that 11 cents. Now, that's a pretty good move on a $3 stock, right? But playing the risk-on game, we see Holly getting out right here. Well, taking more risk and saying, hey, Holly, I acknowledge you're getting out, but you know what? This thing's got some great momentum behind it. It's been moving up. It's taking a little pullback here. You know what? I think I'm going to stay in it. Or, you know, whether we stay in the whole lot or do the 50-50 dance there and go, you know what? Let's plug out of half with Holly. Let's set a break-even stop for the second half. That would have kept you in today as well. But when you see things like this, and you see relative volume relatively high, no pun intended, you know, it finished the day at 2.28, so it was higher than that earlier in the day. That's always a good sign. Second sign, hugging this 10 period. Notice on the pullback, we just came down here and kissed this fast line, the 10 period SMA on this 15-minute candle, bounced right off it, took a trend back up, sets new highs again. So this was a really great trade, and even the opportunity to add to it later on, because, you know, we get the signal here, we get the pullback hugging the 10 period SMA. Let's count off the positive benefits here. Number one, Holly brought it to us. We've got statistical viability on our side. Number two, secondary pattern emerges, a simple range break on the intraday. Number three, we've got that high volume kicking through it for the duration of the day. So those are three very good characteristics, what I like to refer to as a three-star trade. Now, assuming we did stay in it right here and we're pleased, and then later on we get the strong stock pulling back. Now, why didn't it fire here? I don't necessarily know. That would also kind of looks like a strong stock pulling back, but it got up a little higher, popped new highs, took its pullback here, and Ollie's like, yep, looks good again. All right. And on this one, on risk on, you would have enjoyed 20 cents going into the close on a $3 stock. That's a nice cherry on top of a position that we're already in. Now, having said that, you know, if we draw another line here, we could have bolstered the position here, assuming everything still looked good with the stock and the volume was still staying in it here. So just a great trade from Holly on MLNT today, with some nice risk on, risk off spread in there on a double entry with a secondary pattern emerging, hugging that 10 period with some really good volume. So I just saw a flurry of questions pop in here. Let me just see if I can answer them real quick here. Let's see.
Yeah, since they're Holly related, I figured you could demonstrate.
Okay, do you ever put one or two Hollies into hibernation? Good question, Marguerite. You know, as we can see here, we finished the day with 26 positions, but it's not like these were coming out in rapid fire. If I sort by time, you know, we always get the most activity early on. Some of these were relatively close together. But if you ever want to tone it down a little bit, and of course, we can't sit here and pick and choose and go, well, we can. I just don't know if it'd be very effective to go, well, I think Holly 1.0 is going to do the best today, or Holly 2.0. We never really know which one's going to lead the pack, okay? But if you want to do that, we can certainly, let's see here. Well, I think I just stuck my foot in my mouth here. Segments, there we go. Okay, so if we only want to see one here, if we only want to see Holy Grail, we just come down here and select segments. I'm so used to having mine on all because I just think that's the most efficient way to do it. I want to see all the Holly trades, but I want to conserve screen space. So, you know, before we had the option to select all, we could select which segment we wanted to see, but then we had to create 3 different windows if we wanted to view all the segments. So yeah, it really just depends on how many alerts you want to get exposed to. But if you want to put one of the hollies in timeout, you just come down here and select which one you want to see as opposed to removing it, which is where I tried to go first there. So number one, if you're on all, and let's say you only wanted to see 2.0 and Neo, well then you just have to point 1 to 2.0, duplicate the window, and then make one for the second module and then resize them accordingly. So hopefully that makes sense, Marguerite. And your thoughts on when stock is mentioned by all 3 strategies, even stronger probability. I wouldn't necessarily say it bolsters the probability, Anthony, because if we come back here and look again on A, G, and C, you know, it's the exact same strategy, right, on this one, and they were issued at the exact same time. But on the one that we were just looking at here, that's not the case. So one could you know, extrapolate, well, here's the first signal right here. Here's the second signal coming from not only a completely different module, but a completely different strategy, right? So I would say this one definitely has more tendencies to, you know, if they come out at separate times, that means 2 separate events or strategies are identifying the stock. Just one's earlier and one's later. So to your point there, when we see different strategies at different times, that definitely makes me pay attention more than the same strategy, but from just different modules issuing that trade at the exact same time. Hopefully that makes sense. All right, good deal, Marguerite. Okay, so now back to risk on, because there was more risk on today as well. It was always good to see KMX hit a target. And by the way, this was one of the nicer range breaks today as well from some of the big cap stocks. Get to that later if we have time. And then some nice juicy risk on in this PAG short that was issued by Bond Shorty today. Now, this is an example of one that wasn't actually raging on volume, finished actually doing less volume than normal with a 0.68 on the relative, but a good trade nonetheless. Let's see, is she giving me my boxes there? Let's see. Yeah, we just can't see the stop. There we go. Have to squish it up just a little bit. So a crisp entry signal here at 46.82. We do take a little excursion up to 47.20-ish here, but as we can see, the stop that Holly was using is way up here, so we did get a little bit of a wiggle, but it wasn't too much more time before we're back down to the entry line. And this one sure took its sweet time. Now, therein lies why Holly booked a 9-cent profit in a reduced risk mode, because when we get this type of action out of the money, back down to the entry line, when we get that negative directional movement, then Holly starts her counter, and the longer she stays in the trade and it's not doing what it's supposed to, she can call that audible. There are 2 audibles, just to refresh everyone's memory: reduce risk and profit save. I like to refer to those as audibles other than the hard-coded things like stop loss, profit target, and timed hold. So if a position is not working, she's got the right to exercise reduced risk, which she did in this case, coalescing with the shaded area that we see right here. So just barely in the money whatsoever. But after we've seen it take this little excursion and come back down, well, that's kind of a good sign. And if we would have chosen to go risk on with Holly, taken a little bit more risk here, it would have taken a little bit of time, but that's not necessarily a bad thing, seeing it go sideways here. In all actuality, if we're using these candle bodies right here or playing strictly by the rules, we'd have to include that little wick right there. But actually, this one sets up nicely for a second entry here, as this range right here is penetrated, and then we just get, you know, a nice little downdraft for the rest of the day. So, you know, always keep that in mind, and this kind of ties into with watching the AI. Sure, sometimes, but not all the time, as soon as she calls something, it works fabulous, right? Goes up. Other times, they go sideways, and we see her plugging out in reduce risk or profit save mode. So remember, if you see Holly flash, or you've got your sound attached and you hear the Holly sound, and you look over and it's her closing out something in reduced risk or profit save, maybe you take a second look and go, this thing is right at the entry line and we're getting some consolidation. That's not necessarily a bad thing, because sometimes they just take a little bit longer to go, other than the time that Holly gives them. So a nice trade and a nice spread there of 58 cents between what Holly booked in the 9-cent profit and what we're showing into the close here, 67 cents, even up a little bit more at these lower levels here before the close kicked in. All right. I was just checking out Steven's question there. I guess you got it answered though, Steve. Okay, perfect. All right, so some decent spread here in, well, we already talked about the MLNT. That was the duplicate. Yeah, all right. P&W, not a huge amount, but over a 2x of what Holly extracted from risk off. And the reason she got out of this one was the timed exit expired. And on this one, you know, based on market conditions as well, this one would have been, you know, kind of a tough call. You know, Holly makes a pretty clean exit. Let's see, that 14 cents, yeah, and 34 cents as of the close. But, you know, a break-even stop would not have kept us in this one, all right? So, you know, we would have had to have stuck to the hard stop. And sometimes that's hard to do. To watch that thing come all the way back against us, even go negative, and then only to, you know, be at some of the higher profitability by the close. But that's why we have our rule sets, and it's something that you should go into each and every day. For example, my compare count was just barely positive to the green side today. So, you know, if I see compare counts flopping around 55, 56% or lower, then right off the bat, I tell myself, okay, well, if I'm going to go risk on with a Holly trade, I'm probably going to, you know, either, you know, take the risk of giving it all away, sticking with that break-even stop, because on a soft day like today, a lot of the times they'll regress back to that entry line. So when compare counts are weak, a lot of the times if I am deciding to go risk on, better stick to that hard stop, because the break-even will get you out. Now, having said that, if we took half off with Holly when she exited, and then use the break-even stop, well, that's kind of the best of both worlds, because if the second lot rolls over and flats you out, you still made money on the first lot. And that sounds better to me than losing on the entire trade or flatting the entire trade. So just keep that in mind. All right, ELF, we've got almost a 2x factor here going into the close, 15 cents versus 31. Once again, a timed exit. Strong stock pulling back on this one. A nice little well-behaved trade. As soon as we get in, we get a little ebb and flow around the entry line. We get a lift here. Holly makes her 15 cents. Once again, a great, you know, and if we have, as we were in the trade with Holly and risk off, we popped highs again, went sideways a little bit before we got a big majority of the move here. So once again, a trade generated by Holly, if we're in it already, would have been a sweet time to add to that trade as we pop these daily highs here in a nice consolidated fashion, sticking to either Holly stop or just looking for a prior 15-minute low once the high of the day is penetrated. So, you know, looking back here, we could have used the stop even a little bit less than Holly if we wanted to bolster or add to that position. So we could keep the same stop or eyeball it for a little bit better stop than what Holly has generated. And I do believe, oh, we got one more here that's over a 2x factor here. Tailwind TCBI here. So we got that $56 entry. We get a little bit of a wiggle, but nowhere near down the stop there. Yeah, not even quite halfway before we get a nice little lift there. Now on this one, look at max profitability, which we can always refer to this column right here. At one point in time, Holly was up 48 cents in that trade, but by the time she closed it out right here, took that little regression, bounced off that 10 period again, and she got out for a whopping 13 cents. and it never got back to highs. Holding it into the close would have only got us 27 cents, but that's still a 2x factor, 13 versus 27 there. But if you don't have max profit in there, I'd highly recommend watching it. Here's another good example of one that did not have a risk-on spread here, but at one point in time it was up 70 cents versus Holly booking 48 cents in a risk-off mode. And I've grappled with this myself time and time again. And so if you're wanting to capture some of these higher levels here, I mean, there's really no way, since we're looking back at the past here, but a good way to capture some of these higher levels on this max profit column is just going into the trade with some type of profit in mind. Hey, 1% gains, they're all over the place. It's not saying that they're easy, but when we get something that moves up 2, 3%, well, that's ways of time that you might want to think about peeling some off, whether Holly has done that or not. And I do believe that's all we got for Holly today, but if we go ahead and just sort this by a percentage basis again, on risk off versus risk on, throw out the biggest one and throw out the smallest one, we've got a little bit left over on risk on percentage there. Man, that was really a nice 14% gain on that MLNT today. And once again, as the market continues to gyrate and find its feet, if we start heading back up in the next few days, I would probably expect the IWM to start doing its little decoupling dance, or actually that'd be on a down day where the IWM was, positive and when positive negative. So it'll be interesting to see if the IWM comes back to life this week. Okay, moving right along. Let's swing. So what I did today is I took a couple of my favorite windows, my turbo breaks up and turbo breaks down, and I thought to myself, well, everybody loves, and by the way, well, why do I like these windows so much? Because they help me find these range breaks that I like to hit on the intraday. I've done back testing with these windows in the past, and it's always stuck in my mind, and Steve and I have talked about this ad nauseum about contrarian entries, all right? And so today I decided to put that to the test, and what I did is I did a little optimization here. Now, what I'm gonna do is I'm gonna go ahead and drop this into the chat, so if anybody wants to eyeball it in the trading day, perhaps take a few trades off of it, you'll have it. So let me just do this as I go along, that way I don't forget. All right. And this one does have one custom formula in it. So if anybody wants it, just email info@trade-ideas.com. Tell them you saw the webinar that Jamie did and you want the next higher low custom formula, because that's the only custom formula that is in this one. Everything else is stock, next higher low custom formula, and I'll be happy to put that into your account. Okay, so let's take a peek. This was derived from turbo breaks down using new low as the trigger. And basically, I can tell you right now, the only thing that I added through optimization is the following. Count, S&P change for today, little daily RSI, and average directional index. All these are just the original settings up here. So 1, 2, 3, 4 filters were added through optimization here. And as I mentioned, these are swing trades. So let's take a look at the backtest settings. We're not even bothering looking at anything until 15 minutes after the close. Now, initially I left it wide open, but I figured out through optimization that after about right at the 11:30 mark my time, 11:29 to be exact, which will be 12:29 Eastern, performance starts to wane. So that's why I'm stopping it there. Now, the timed exit for the swing hold is at the open tomorrow plus 2 days. So in essence, right about 3 days. Let's see here. Now, here's the kicker, all right? And when I'm talking about intraday, back testing and generating those statistical sets, when I'm teaching 401, I'm always telling people, look, you better not forget to add a stop loss, because you might create something really, really good and everything's all rosy, and then as soon as you attach a stop loss to it, the wheels fall off. Well, this is the exception, because when we're talking about swing trading, it'd be nice if we could just apply one magical stop and have everything work. But as Steve likes to say all the time, trading is quite subjective. And when we're talking about swing trades, it makes a lot more sense to consult the daily charts to pick our exits in case we're wrong. So we know that when we do the back test here, we're in a nice, warm, deep swimming pool with a lot of potential, okay? But we're going to have to rely on the daily charts to address our stop losses. And once again, you know, this is a good statistical set, but keep in mind, is everybody going to take every trade? No. But we know that we're starting in a very advantageous spot here. Don't really have anything going on in the advanced area, but we're going to be back testing 40 trading days, right over 2 months on the calendar. And let's just see what we got here. Hopefully I didn't screw anything up. Okay, well, looks like something. Just check these settings one more time. Stop loss. Okay, that's slightly different, but looks good nonetheless. Okay, so over a 40-day period, we've only got 163 trades coming through, which, you know, might be a little too many, but over a 40-day period, that's quite manageable, probably right around average of 4 trades a day. Nice profit factor, nice spread between average winner and loser. Monthly and projected annual look pretty good. I've got the buying power dialed in just perfectly here. So on the busiest day, we would have needed 120K in buying power to be in everything. That's why 31,000 on a 4-to-1 ratio, we're right at the threshold there. One more thousand down, we're pink, just right. Simply meaning that these projections are more accurate once we have that proper 4-to-1 ratio dialed in there. Now, keep in mind, this is swing trading, so a lot of broker dealers out there only give you 2-to-1 overnight. Now we're allocating $2,000 per trade, dollar on the in, dollar on the out, and 50 nickel of slippage on the entry and the exit. So when we look at the daily, not too bad here. On some days we don't see anything, but that's okay. Now looking at these metrics down here, biggest winning day based on $2,000 position sizing, 1824, not too bad. Biggest losing day, 538. Drawdown, not a bad drawdown. And everybody keep in mind that this is focused around equity. Now, you know what? It just dawned on me. I'm so used to doing 4-to-1. We'd probably need right at 60K in here, which kills the performance a little bit, but to be more accurate, okay? Notice how these adjusted in real time. So now we're only looking at a little over 1% on the drawdown, which is about 600 bucks. So that would be your maximum pain threshold. If you were piling into everything and just waiting for things to get traction, that would be your main pain point. You'd be down 600 bucks at one point in time, but hey, you might be in a bunch of positions, so keep that in mind. But when we have a biggest winning day over 3 times bigger than our biggest losing day, this is just showing us the intraday fluctuation, right? So 600 bucks based on, you know, 60 grand in equity. This is always going to be based on your equity. So 10% is 6,000, 1% is 600. But that wasn't even the losing day. Things got better before the day was over. Buying power is going to coincide right here, and you can see that most of the time you're only needing about 40,000 in buying power. This just happened to be a busy day that you're going to see corresponding with this day right here. Once again, assuming that you're going to be in everything, which most of the time people are not, unless you're running some type of automation. So when these come out, we're just going to treat it like any other alert window. We're going to size it up. We're going to look at the chart. We're going to pick what the stop loss would be on the daily in case we're wrong, and then we're going to do it like that. But we know we have odds behind us to start the show, just like we would in a Holly strategy. So let's take a peek here. And let's just look at, say, it closed some positions out Friday, nothing to write home about. It was up a smidge, but we can look and go, all right, if we were, and you know what I'm going to do? I'm going to put the intraday on hourly, just so we don't have to scroll back eternally. So if we look at LOPE, all right, we can see where the entry price was here on the daily, and we can quickly eyeball the intraday chart here and go, all right, well, whether we look back here and go, you know what, I'm going to use the low of this wick for today. Once we get a little traction, that'd be good, or anywhere down here, or maybe we go back a little further. You know, notice if we look all the way back here, you know, depending on your risk threshold, maybe you give it all the way down to flirting with that gap. But as you can see here, whether we picked any of these prior levels above this lower extreme here, we would have stayed in the trade. So this is how you're going to have to address the stops on these things, is consulting the daily. So hopefully that makes sense. If we go way back, let's just take a look at some that worked here and that did not work as well. SGen. Now this one would have been a little bit trickier here. You know, we're in the middle of all this chop right here. So if there's nothing clearly definable, that's okay. We don't take the trade. We have the luxury of picking and choosing the ones that look extremely solid on the daily. This one was just a little bit early here, but you know, if I was going to take this trade at this candle right here, my eyes just immediately go back to this line right here. You know, everybody always needs to keep in mind, and Steve can attest to this, whatever you think the stop loss is, go down one more notch further, look one level down, because most of the time they're always going to fill it or take it a little bit past the pain threshold. What was the stock, Steve? Was it Roku?
Yeah.
The other day?
Yeah, we filled the
Okay.
gap perfectly.
The Friday, you know, when Roku, of course, Roku was the king beast, and everybody was like, Roku just goes up every day. And of course, everything backs off eventually. So, you know, right here on Friday, you know, when it was coming down here, we're like, oh yeah, it's probably, but you know, the gap was just beckoning like a siren song, and Steve and Andy were like, yeah, I bet it's going to fill that gap. But boy, it filled it quick. We kind of expected it maybe to give a little pause here and then fill it in today, but nope. They took it all the way down, and I could assume that there were probably plenty of people that went ahead and put their bids in and, you know, put a stop down here. And boy, it ate right through it, chewed right through it all on Friday. So hopefully this makes sense. And if there's no quality on the you know, on the daily and it looks too congested, you just pass, right? This would have been a nice one. Etsy, it already put in these bottoming candles for you right here. So if you want to play the Etsy, 45.90-ish, yeah, or actually that's 49 and change, then your stop would have been down here, just a little under 48 and change, or 47.88 or so. So by using the daily to dictate your stops instead of just trying to use a canopy across the board, is definitely the way to go with these things here. Just another high quality ticker that's been optimized, and we have odds behind us. Hey, well, what does that mean, Jamie? Well, if I was trying to bottom feed off of Turbo Breaks Down, I can tell you right now, I'd have less than a coin flip, probably like 48, 47% of anything working. Whereas on this one, we've got a nice, already for was 60%. That's a big difference in the statistical world here. All right, just keeping an eye on the time. Got a couple more for you guys. All right, so that one is in the chute, and if anybody wants the custom formula that's part of that, just email the info@trade-ideas.com. It'll get routed to me, and I'll just pop it into your account automatically. All right, so that's the intraday bottom feeder. I just called it intraday because it's a derivative of this, but it is a swing strategy. So then I got to thinking, about my other versions of turbo up and down, which these versions right here, the up and the down version, relatively the same, except they have to be at all-time highs, whereas these don't have to be, or the highs over here, and these have to be at all-time lows, right? Work been getting pummeled from its opening day where it hit 42.08. Stock's almost cut in half, and as we can see, it's down here acting like it just wants to bust through and go into no man's land. But needless to say, I've spent hundreds, if not 1,000 hours watching both of these tickers. And for the original purpose of shorting things like this in hopes that they continue and buying the ones that are breaking out in hopes that they continue. But we all know it's not that simple. Some continue, some don't. You never know which ones are going to go, which ones aren't. That's just the nature of the beast. So I started thinking to myself, okay, well, what if we went contrarian on these guys? And by the way, I only did it with the ones that come through in green because those are the big caps. Since these are multi-strat windows, if we take a peek in here, 3 different versions of the same strategy, but we're going to be focusing on the big caps, the 4 billion market caps. We're not going to bother with the smaller ones, okay? So the first one is looking at what would happen if we bought things that just popped intraday lows and held those for a swing, okay? And keep in mind, there's not very many of these things happening, so you're going to see a relatively small trade count here, but the results are quite interesting. Okay, once again, contrarian, all right? So only 23 stocks came through in the 40-day period. No big surprise there. This ticker is usually pretty dry in and of itself anyway. And when it does fire, it's mainly the yellow and the mid caps, which can be spready and untradable. So I just choose to focus on the bigger caps. And look, not a lot of trades coming through, but hey, might be something to pay attention to because 78.3% is nothing to sneeze at, even on a small trade count. And there was no optimization done here, ladies and gentlemen. This was just, hey, let's see what happens, right? And of course, it's going to be trickier with the stop losses here because, well, I say trickier, not really, because if you do buy something that just busted down into the abyss, it might bounce and it might not. There's always a chance that it might not. So that's why you really have to wait for a nice wick here, okay? If you can get in and make an entry and then use the low of the day or maybe 1% past the low of the day, that would be the way to approach this, because if we would have played the bounce and we look to the left, we got nothing to rest on, okay? There is no net. You're flying on a trapeze with no net, okay? So if you do choose to make an entry with this one or the inverse, fading the tops, then we have to feel comfortable that the top or the bottom has been put in and probably go a little bit outside of that low once the stock starts to bounce to ascertain a reasonable stop loss, you know. So keep that in mind. The low of the current day plus a little bit outside of that candle either keeps you in or it doesn't. And if it rolls back over, you're not just stuck in like a deer in the headlights watching the thing go down. You got to exercise that risk management, especially on these, since there's nothing to rest on as far as support goes. So interesting, you know, that these things are bouncing as soon as they punch those lows. And let me tell you, I know from experience from trying to short these things, which is what led me down this path. I'm like, you know, every time I tend to short one, number one, they rip it up immediately. The algos. So they're, you know, they work sometimes in the direction that you think they are, but the odds are showing us that most of the time they're going to bounce for a couple of days. And on this one, we've got a hold time at market open tomorrow plus 2 days. So let me drop this one in the hopper as well. And the interesting thing about these, notice the name, Noon Knife Catcher. And that's because all the trades that are issued in the first hour, 15 minutes or two, they all didn't do this. So I'm thinking to myself, okay, let's go to optimization. That's what led me down this path. The ones after 12 p.m. my time, which would be 1 p.m. Eastern, are the ones that tend to bounce over the next couple of days. Did I know that before I ran the back test and did some optimization? Had no idea. That's why I call it the Noon Knife Catcher. And the Noon Fade. And guess what? That noontime number there works on the fades to the upside as well. But what you're going to see here, because of the market conditions that we're in, a lot more trades. Once again, relatively simple. And both of these, there are no custom formulas, just a little bit of optimization with, I do believe, the only optimization I made on this other than the time was the position in the 60-minute RSI of 69 in the min side. So, of course, these are short plays, fading those all-time highs. Okay, and that pretty much is it. Let's see here. That's because we're on a 2-to-1, so we'd need to be about 40, 47. And things still look pretty promising, even not on a 4-to-1 level there. Got nice distribution on the daily. And sweet metrics down here. Biggest winning day, almost 1,200. Biggest losing day, 310. What about our drawdown? A nice manageable drawdown. Once again, if we were on 47,000 in equity, that'd be about 470, 500 bucks, assuming you were in every trade, which once again, I don't think anybody's going to do unless you're really aggressive and don't mind taking that risk. Nice, easy disbursement here, and pretty much the same thing as far as picking our stop losses. So trades that were closed out on Friday, take a look at CQP. All right, so the entry day, come on, work for me. See what I'm talking about, the topping tail? You get the entry here, or you wait for this to occur. You wait for the tail to occur. Maybe you don't make an entry down here to feel a little bit safer. You know, that seems like the wiser thing to do. But if you did, top of that tail or slightly outside of it, depending on your risk threshold, that would be your stop loss, since when we look to the left here, there is no potential resistance to run into. So these are a little bit more, well, I want to say more dangerous. As long as you're adhering and seeing the daily high and getting a little bit of reversion and putting your stop slightly outside the daily high in this case, then you should be fine and be able to control the losses when they come. Another good example, well, CQP, these guys look pretty similar. So here we have the same thing. We get the entry signal here, putting your stop 1% above that level right there would have kept you in nice and tight. So once again, picking the high here, waiting for it to capitulate a little bit. Oh, wait, hold on, I keep tricking myself. I forgot I was on 60 minutes there. In any case, you don't necessarily have to execute these things on the day of either. You can create a watch list and go, okay, as soon as we get down into that green candle, we start to see what could be a potential red candle or a bar reversal, we can make that play. If you see something good on the intraday, you know, and I'm just going to use it as an example today, even though the entry was not today. That's 15, not 5. There we go. You know, let's pretend for a moment, and this was not the case, but let's say a stock is triggered, and this is what it's looking like on the intraday, all right? You don't have to just jump in there. You can wait for the next candle to form and go, okay, It's below that level there. I think if I go 1% outside of here, it should keep me in the trade. So hopefully what I'm trying to convey to you guys makes sense here by using, the high of that day plus 1%, plus 2%, depending on your sizing of your positions. And remember, as you're picking these trades, if you decide to engage in them, you don't have to do big size, especially when you're trying something new out. It's always good to size down and increase that wiggle from 1% to 2% until you get the hang of it. But from a statistical standpoint, we're not looking too shabby with this fade strategy here. So really good numbers, nice spread between average winner and loser, nice winning percentage. The devil's in the details on the stops. All right, well, I think I still need to drop this one in the chat, and if anybody has any last minute questions, go ahead and pop them in there, because it's almost time to bring Scott in and let him walk us on out of here. All right, and that one is in there as well. All right, don't see any new questions popping in there. Let's see, Anthony, did I skip it? Steve, did you answer that one about the cloud link?
About which one?
Let's see, Anthony, save and load the link above into our cloud. Yes, that is what you would do if that's the question that you're referencing. And David, yes, the first strategy is the only one that needs the custom formula there. That is correct. So I think we're good. 3 hollies in the compare count. Well, that one must have slid through the cracks here. Compare counts to be, and how can we set up the same window? Ah, I see it now. Give me 1 second here. Well, I tell you what, Anthony, I'm going to drop that compare count window in there for you. And what I will say about the accuracy of the compare count windows is they don't work all the time, just like anything, right? But it really depends, typically from my experience, based on how strong the bias is. Once we get past 55, when we get to 57, 58, approaching 60%, that's when I'm more inclined to lean to that direction for follow through. And then seems like 2, 3, or 4 days out of the month, we'll have compare counts over 70%, which once again, not all the time, but a lot of the times that is the direction that the market can take. So I dropped that one in the chat area for you. And the best thing to do is just to watch these things. Get in the habit of just looking at what the readings are after the first 15 minutes. Look at what the market did initially and where it finished. And that's the best way to kind of get a feel for these things. All right, Scott, without further ado, we are ready for you.
All right, sounds good. Thanks. A couple items on the way out. Important announcement, our summit is in October, Saturday, October 26th. If you can make it to San Diego, do so. It's a great show. We had a lot of positive feedback from the last one. You can check out, we have some links on the website for last year's summit, but if you look for it, just search for Trade Ideas Summit 2018 in Google and you'll find the replays. But if you can make it, go to trade-ideas.com/summit, use the code on your screen to register and save and attend. Tickets are limited, so act before, I'd say, get yours within the next week or so if you're planning on coming, to make sure you can get the hotel reservation. We've got a block of hotel rooms at a hotel around the corner that's really nice. It's the Kimpton. And you get discount rates there, and the details on how to get those discount rates on the page. If you can't make it in person and want to watch online, just go to trade-ideas.com/livestream. Put in your email address to get notifications about how to watch it when we get closer to the event. You get the special link and the exact time that we're starting, all that kind of info. Looking forward to it. We got a lot of great speakers lined up, and you can get details on the speakers at either one of those pages. Just check it out. We've got a new series of ebooks, had them out for a couple months now, getting really good reviews. Trade-ideas.com/setup is the URL to go to get downloads for all of them. There's 3 in the collection, and each one is organized by topics. So you've got 3 separate topics. Both Jamie and Steve contributed chapters. Take advantage of this free offer there for those. We have a podcast, have new episodes up. We've returned from the summer break to get to more regular publishing again. So we've got new ones the last couple of weeks. Go search for Trade Ideas Podcast in whatever app you listen to your podcasts in, and get the inside scoop of the new fintech that we're developing. Find out about the upcoming paper trading module that's going to be released for every subscriber. All of that kind of good info. There's a code, Summer End. It's all caps like you see on your screen, and it's good for 15% off the first month or year of any Trade Ideas subscription, Brokerage Plus license, or upgrade from standard to premium. So just write down that code, use it before September ends, and you can use it. Follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We've also got at Trade Ideas. Trade Ideas Pro is the Facebook handle to follow and share stuff with your friends. If you have any questions or anything for support, email info@trade-ideas.com. It's the best place to send all your questions because it goes into our help desk software. Won't get lost. It'll get answered in a timely fashion by the appropriate team member who can give you the best answer to your question. Thanks, Steve and Jamie, for the nice webinar. We'll have the recording up later on tonight or tomorrow morning. And thanks all you guys who made it to the webinar.
See you tomorrow.
Yep.
Thanks a bunch. Everybody have a nice day tomorrow. We'll see you. Bye-bye.
Yep.